Good morning, everyone. Microphone check. Mic check? Screen check? Yeah, there we go. I don't know why. Lately, Zoom has been taking a second. Yeah, speaking of which, Zoom has been taking a second to register the microphone. Once it gets going, it's fine, but it's that first little bit. Either way, good morning, good morning. Welcome. Hopefully everyone had a fantastic weekend. Hopefully you're all able to rest up over the weekend and get ready for the week ahead and all that fun stuff. Of course, as always, before you jump on the right side of the screen there, make sure to read through the Live Trader Morning Prep PDF. Very important to go through and understand everything that is inside there. And just a quick note for you all as well before we jump on the YouTube side of things, the stream does have between like a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. All right. Oh, good morning. Good morning. There we go. Got my windows popping up all over the place here, wrong spots. Hey, welcome back to Monday, right? Just want to take a second like we do every day to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Welcome aboard to the SSFTG family. I'm super excited to have you all on board with us. If you aren't a part of the SSFTG fam yet, there are a ton of different ways to join up. The easiest way is to join as a YouTube member. That's with the join button right below the stream. It gets you in the chat room, the YouTube community boards, the stock and crypto chart posts, and all that fun stuff. And it gets you a little bit more behind the scenes and what's going on. Of course, if you want to understand how we do everything and in our overall approach, check out the Day Trading Academy along with everything else over that we have waiting for you over at SSFTG.com. Good morning, Stephen. Welcome, welcome. So if you're here for the first time or the 1000th, good morning, welcome. I hope you're all ready to rock and roll alongside me today, analyzing these crazy markets of ours. Let's take a look at some news. Take a look at some charts, all that fun stuff. I do have the schedule for the rest of 2021 posted. This may get updated as we go, but just for the holidays and everything of what to expect. So just so you've got that ready to rock for you there. Don't forget to grab your morning DP levels as well. Those are posted for you this morning in the Major 7. NASDAQ, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. I always got to give Ethereum that special little bump. To the moon with Ethereum, well, Shiba or whatever the hot ticket item is. Don't forget to grab your morning DPs. Looking at the news calendar, we really don't have a whole lot going on. We had some early morning investing.com news. FOMC member Quarles is speaking at 5:30, but I mean, there's nothing else really going on. And as we go into the U.S. session, not really anything has changed. 9:15 industrial production, and then we've got. After that, 1400 and then 1600. And those are both medium news announcements. We really don't have any major news announcements for today. So, kind of have to wait and see what it wants to do. But all things considered, there's not a whole lot on the news calendar side of things. Heck of a lot of volatility going back and forth across the board here, though. So let's take a look at what's going on the charts, and we'll go from there. Looking over on the NASDAQ first. The NASDAQ has a very nice continuation back to the upside. And one of the things that we really needed to see... One of the things that we really needed to see here is the breach above the new high to demonstrate that, yeah, we've got the higher low and all that, but when we started breaking back into these, we knew that this wasn't an impulse. And if it's not an impulse, then we've really got to look at this and say, okay, well, we need more proof. Are we going up or down? And now that we've broken higher, we've gained a lot of extra proof. So if we're looking at this full-blown rotation here, initially the buyers tried rotating back up. And remember, this was previously a bear trend, but that didn't stop the POC from sticking at the bottom. So the bulls picked that up pretty aggressively off the lows, and they weren't too shy about it. But all things considered, a lot of sellers are still likely going to get stuck in that kind of rotation. The overall move that they finally had, where did they end up putting in a low? Was that a double bottom? Yeah, that was a double bottom, so with a barely higher low and a continuation back up, took a long time, but they eventually rolled their way all the way back up to new highs and finally confirmed. It was like, okay, yeah, I see, okay, I get it, cool, obvious enough, whatever, but gain some extra proof here because this is no longer an impulse, right? We know that this is, if it's not an impulse, it's got to be a corrective phase, and we're at the top of the 5-wave corrective phase. So, from a corrective phase standpoint, does this mean that the market has to collapse right now? Well, it's the end of a 5-wave completion, or at least the perceived 5-wave completion at this point in time, given the information we have. But that said, does this have to be the end? Right? I mean, we've seen 5 waves that go way longer than even the 3rd wave. So, I mean, really, the way that this is kind of standing out doesn't necessarily say that this has to stop right this second. If anything, if the bulls are going to creep this back to the upside, we're breaking above that previous swing, and they're not coming back to retest. That's one of the prerequisites of an impulse. So, although we didn't have the impulse back here, if they're able to kick this thing into high gear and make it go crazy, well, we may just have a new impulse. We'll have to wait and see what they want to do, but looking at the larger perspective, obviously we're grinding down on a way bigger bear move lower, and maybe that is a corrective phase before a rotation back to the highs. But, you know, these POC shifts, these bottom weights, these high, really staying high type things, this is good stuff. This is what they need to see. It's just a matter of whether or not they're actually going to be able to hold it up here. This seems fairly exhausted, and given that we've got 5 waves of completion, I'm not going to put my bets on the bulls today. That just seems like it might be a little bit of a tough time. Not to say that they can't win, and if we gain more proof, then sure. But right now, this seems like, you know, top-weighted settlement, market's having a hard time, might want to pull back into a bit more value. We'll see. Wherever value ends up being, if we go all the way across, it's probably up at the top, right? I've got to assume it's at the top. Yeah, 15,080. But if they do want to dip back down, it's, geez, down at the 725s. 750s. Just like sub 800s. That's where the volume really starts creeping up. There's not much in between there. Yeesh. I don't know. It just doesn't look so great from the bulls' perspective today. Looking at the S&P, similar situation. We had this kind of back and forth wedge consolidation, and this was a lot nicer looking than what we had on the NASDAQ. Big old breakout, but again, too deep of a pullback for this to be a, well, anything other than a corrective wave. And if we're looking at it from a corrective wave standpoint, then really we've got wave 1, eventually wave 2, 3, 4, 5. And we're kind of hanging out on top of 5 again with completion. If we're looking back at the overall last volume, we didn't have that higher low transition like we did in the NASDAQ. The only time that we really had it was inside of this wedge, or when the market finally broke higher over here. Oops, didn't quite draw it far enough. Right there. Now it's not quite far enough over. All right. Come on. I think I can. Oh, or not. That's cool too. Let's try that again. Go from the bottom. So the first one has a POC very similar to what they did on the NASDAQ. I'm trying to draw the order flow on the... There we go. Okay, so the POC is still hanging back out at 42.80, but we can definitely see there's a lot of volume built up underneath here, and it wouldn't be a surprise at all, you know, back here to have seen that little trap in a continuation, but they didn't get it. Right? There was no trap underneath the lows, and there was no dip back to the POC. We had, like, on the NASDAQ, it looked perfect, but here, they didn't have that. So this FOMO squeeze, which really is what we can consider this, kind of makes sense, right? A lot of buyers wanted to buy that dip. Buy the trap underneath the lows, buy the little, you know, gobble up those stops, and they didn't get it. So when it rotated all the way back up, it's like, okay, no, it'll come back. Don't worry about it. It'll come back, right? Right? Uh-oh. Wait a minute. wait a minute. And then FOMO starts setting in. Now we know how FOMO works. A lot of the FOMO buyers probably bought right there. So they're getting squeezed, and as per the usual. But if we're looking at the overall movement from the bottom to the top of this, let's see where they got stuck from. Ooh, they didn't get stuck. 43.55 is the POC from the bulls. Lots of volume that built up into the 44.29s and a lot more volume building up into the 66s. And guarantee we move this a little further forward and it shifts. But on the impulse, it didn't shift, which would potentially suggest then that the short-term bulls are still in. They haven't even necessarily taken profit, although there was some obvious profit-taking, or at least partial profit-taking at 430s. Building more profit-taking into settlement in the 60s. So if it is going to pull back, 43.55 is a hot spot. If we go back further than that, all the way down to the previous, you know, the overall actual low, that'll give us a nice clue if it does want to pull back further where it's going to go. And there it is. Right back down to 43.55. Yep. Looks good to me. Gotta wait. Over on gold, speaking of good, this is the opposite of that. This looks like absolute trash. What a chart. I don't even know. Man, I don't even know how to approach this thing. This is on a different level of vindictive. Unbelievable. So, man, be on your guard, I think, is the best way to approach the gold market right now. This thing is just ripping faces off and taking names. The overall movement that we've got right now is very spiky, very choppy, very nerve-wracking, to say the least. This back and forth that we've got going on right now, we just had a very, more recently at least, nice spike to the downside. So, realistically, that would lead me to believe that the next spike to happen, which seems to happen pretty frequently, should be a spike back to the upside. We'll see. But if we're looking at the overall volume formation from the top all the way down to the bottom, and then from the bottom all the way up to the top, this is the one thing that a lot of bulls are going to be looking for, this 58s, and they are close. Very, very close. So, big zone of interest to see if they're able to actually make it there or not. But, I mean, close is close enough, maybe? We'll have to see. Very interesting. Right now, I think until we get at least a break of some structure, the bulls don't have much of a chance. It's got to be low probability longs. Over on crude oil, this thing just keeps on going. Just keeps on going. Unbelievable. Incredible momentum to the upside. I mean, certainly have to be impressed with the amount of tenacity that the bulls are coming at this with. They're approaching like Ethereum aggression, right? It's very similar. We've got these higher highs, higher lows. Everything continues back to the upside. Everything's rocking and rolling. The more recent dip low that we had, if we look at that from a value perspective, 348 ticks. This one was 480. What? Whoa! That just threw every dyslexic person on the planet off the cliff. Wow! 483 and 348. Yikes. The last pullback after that was on the top down to the low. 351. It's just 307. Let's get this to a better number. 357. There we go. That's better. America. 307, and after that, it's the monster pullback off the top. So these shallow pullbacks along the way, 307, 357, 348, 483, we can see that these pullbacks generally tend to be the same size along the way. And one thing that I love looking for when the market starts getting these big rallies is a double value pullback. Those are my favorite. And when we can line those up in a zone of interest, we know that the value on the low side is about 300. So we'll say 300 to 483, 348, 357. So 350 on the high end 480s, right? So let's say like 375. We'll meet it in the middle and just call it 375. That's about a value pullback-ish. And if we look at where that places price, that's right back in previous structure. I mean, we have to be interested. I don't have a choice. We also have the -1 DP, which also favors probability back to the upside. So everything stacks up there. And we're very far away from that. So the other side of things would be that double value pullback. If we can start getting this thing down into the 700-800s, then we're talking. 700-800s, 850s. That's putting us back down to these previous swings. Massive zone of interest for bulls to try to re-up, because look what we have previously. I did a video on this not too long ago. Previous major confirmed swing, previous major confirmed swing. Trap one, don't break the other, allows for a 3-to-1 upward to like a 5-to-1 back to the upside. Bulls are going to be all over the place on that dip down in the 74s. Maybe not necessarily the first ones to the party, but that is going to be a huge zone of interest. Over on the euro, man, the euro does have some higher lows and they're continuing back up. We've got a nice breach of the previous swing. It's a good start. The last time we breached a previous swing, it got absolutely obliterated back to a new low, and that followed off of several lower highs. And if we're going across here, well... I mean, this is making me a bit nervous. It seems like a rinse and repeat of every single time this thing's tried to break above a previous high. Lower high, down to a new low. Breaks above a high, lower high, down to a new low. Breaks above a new high, lower high. Uh-oh. I've got some concerns. Doesn't mean it has to. But given the fact that we just went from drive down, low, pinching very aggressively descending wedge, couldn't even make it to the base, and now rallying higher, this just doesn't seem like the trend is done. This seems more like sellers are going to be selling the absolute ever-loving bejesus out of the highs, and then looking for it to rotate back down to the lows. This seems more like wave 1, wave 2, wave 3, wave 4. We're waiting for 5 for the sellers to come in. And so far, it's valid on the impulse. So, even though I don't want to be a bull, the short term, at least on the euro, seems more bullish. Got to play it how you see it, not how you want it. Over on Bitcoin, Bitcoin tried rallying up to a new high, failed miserably, 62,650s or so, and then rolled all the way back down. Now, you know, here again, is this just an inside test before this thing rips everyone's faces off? As long as they hold the support here, we're good, right? That's okay. But if they start breaking down underneath that, there's not a whole lot left. I mean, we've got the negative half DP down at 59,000. We've got the previous swing at 59,000. But if that doesn't hold, then there's not much left. I mean, if that breaks, then there's nothing until like 56.5-ish. And the DPs don't line up nicely at all. The one that lines up really, really well is the 1.5 down. And that's down just underneath 53,000. Now, NASDAQ. Bitcoin bulls don't necessarily want to see that, but a lot of bulls who miss the train do. Just saying. We still haven't broken new highs, and that fear in the back of my head of the last time, where it made almost new highs and then dropped 85%, is still looming in the back of my head. Ethereum is not helping that. Nice dive to the downside, though. Bulls have their shot to take it. Now they're not looking so great. And if the bulls can't hold here, then really, I mean, what's left? We don't have anything until like 3450, 3400s at the negative 1.5 here, too. So, tough spot to be in on crypto. Kind of missed its opportunity. We've got to wait and see if the bulls can, I guess, catch the knife and flip it back up again, but I don't know. 2 seconds. All right, I'm back. Sorry about that. Good morning. Good morning. Hey, Brad, how's it going? Good morning. Hope. Good morning. Everyone else so far, hopefully you're all doing well and enjoyed the weekend. Ready to rock and roll into the week ahead. Taking a look at what's going on so far. If we're looking backward a little bit, we were looking for that zone of support on that trap low. Still haven't gotten that stupid trap low. Oh well. Looking at more so what's been going on from the beginning of today, basically straight down. Started off the day with a really, really aggressive bear cycle to the downside. I mean, it fits. You know, I kind of would rather draw it a bit more aggressive, though. I like that a lot more. Either way, we've got a break, continuation down, second leg down, etc., all that fun stuff. From there, we've got a nice, aggressive, tight cycle to the upside, which has a break and a continuation. Deep pullback into a further continuation up, which ended up being the end of the line. Bear cycle back to the downside. Now we've got one leg down. Sellers maybe trying to get a secondary leg to the downside, but, you know, again, we've got a lot of support coming in here. There's some issues. We'll see. Yeah, I don't know where Ace is at. Taking some time off, I don't know. Buying islands and such. Alright, over on the S&P. Very similar situation. They just poked a new high. And then super aggressive cycle to the downside. After the bears cycle lower, they do have a break, continuation down, first leg, second leg. And the overall momentum that we've got going on here is very corrective phase oriented. Like, we're not really breaking out of this corrective phasing in the sense that it's not valid from impulse perspective. And if we're looking at the overall rotations, I mean, we've got like L4s rotating down. They're still holding. They still got the L1. They broke down into a near L3, but still technically an L2. Double bottom, rolled back up to another L2, but couldn't even make a new close, so I'm not counting that. That's all part of the one. And then we've got another continuation to the downside. So there's a lot of kind of back and forth, a little bit of confusion, like, I don't know, which way do we want to go here? Not so sure. If we start from the volume on the top all the way down to the bottom and kind of see where we're at, seems like the balance is going to be at 44.47. The bulls tried picking it up above there, and, well, it's not looking like they won any battles. So it's looking more like sellers are trying to rotate off of those 47s, if anything. We'll see. Wow, that is just... That POC up at the top on the S&P is absurd. I can't even click on the thing. Wow. Holy crap. Well, is that right? Did I do it wrong? Go from there. What about just down to here? Yeah, look at that volume node. 65 quarters. Got some massive volume. They finally shifted it after that, but wow. Hey, speak of the devil, there's Ace. Ooh, in Colorado, nice. Looking for cold weather, trying to get some skiing in, or? Hey, how's it going, Vicky? Got the open right around the corner here in about 5 minutes. Crude oil, jeez. Just crude. Crude oil, crude oil, crude oil. And then there's gold's not much better. I mean, again, looking back at the bigger picture here, crude oil's off in the stratosphere. So we're either going to hold down here in the 8230s and keep this thing bouncing up to the highs, really shallow pullback style, or we're about to see one heck of a dip. Fingers crossed for the dip, for me at least. Not really much else going on. Gold's just kind of stuck in the wedge. Pulse to the upside would make sense given what has been happening lately. Nice, that's what I'm talking about. Fall break, huh? Get some sightseeing in. Yeah, that's nice. Well, good. I'm glad to hear it. Hopefully it went really well. All right. Well, we've got the open around the corner here. 9:28 is the next big time slot. Although lately, not much has been happening at 9:28. It's been a little bit on the slow side then. Maybe given the way that things are starting off, it'll be a little bit different. Gotta say, a lot of times when we have a high side settlement and we're way down away from that, especially off of the positive or negative half DP rather, bulls are going to be looking for that rotation to the upside initially. That's usually the case, is kind of an inside rotation back up to kind of get the job done. And that would make sense here. Not necessarily all the way back up to settlement. They don't have to get all the way back up there, but the S&P back up into like the 54s kind of makes sense. I really want to sell crude oil, but there's a difference between a trade strategy and a hope and a prayer. And, well, it's not quite fitting into the trade strategy side of things yet. Gonna have to wait, I guess. That crude go up a lot in Russia, UAE last week, normalized sometime. Who and what to believe? I believe the charts. That's what I go off of. I mean, here, you know, here's the thing, and I joke about it a lot, but there's a reason that I joke about it a lot. When it comes to like CNBC and the talking heads and the pundits, so to speak, I mean, the last time they had anything of interest that I watched, they were talking about buying Ripple at $3, and then like 3 days later talking about selling it at $1.50. And after that, it was like, this is absolutely useless. These people have no clue what it is that they are doing. It's just totally irrelevant after that. So I just look at the charts. You know, that's why, like, when we're talking about the fundamentals with crude oil inventories is a relevant example here. I look at the API, and I look at what the chart's doing and where the volume is, and it gives us a much more accurate idea than what the idiots on TV are going to say. So I just follow the volume, follow the money, follow the chart. You'll be all right. I haven't watched news, and who knows. I mean, it definitely keeps me under a rock on some things that I shouldn't be, but at the same time, I'm also a lot happier. Sometimes ignorance truly is bliss. That happened also after I deleted Facebook off my phone. I got a lot happier. 9:30 hits. Stock exchange is open, back and forth going on. Not really a whole lot happening at the open, though. Kind of calm and quiet. Again, it would make more sense to see a bull rally out of the gates, given where we are. big push to the downside. A lot of times bulls will look to buy that dip, and sellers who were short in the overnight and over the weekend will be taking profit at the open. So a bullish pop, it makes more sense usually in these zones. Of course, it doesn't have to, but the sellers so far on the S&P are definitely winning the fight, though, at 44.45. Sheesh. 70.5 is it for the NASDAQ. NASDAQ feels like it's going to be a bit troublesome around this POC. The S&P now too. This is causing some issues for the sellers here. They're not winning very many fights anymore, and there's still a lot of time on the candle. This is that dip that the bulls could have wanted. Get the shorts suckered in underneath the lows, think that it's going to collapse underneath the bottom just to squeeze the juice out of them. We'll see. I don't know. I still think the bull pop makes more sense. S&P returning back down to the POC, back down to the previous candle's low. Looking at the wider perspective, we're down at around that negative half DP. I'm going to see if I can pick it up on the bid here for the S&P. Nice quick little scalp back to the out. Jeez. Easy peasy lemon squeeze. Sorry, it's one of the songs my kids have on YouTube that's infecting my brain. Nice little dip, basically re-upping into the dip at the POC with a bullish confirmation. And again, the mindset that the sellers just got suckered in at the lows for a quick little scalp back up again. Still, like, not even 3 minutes after the open, though, so very scalp territory. Nice little dip, though. I still think potentially longs have an opportunity to try to hang on for a lot more. Gold bouncing up. POC at 1767. Helps if I measure the whole thing, yeah. Ooh, and look at that wick. You know what, though? I'd rather see it get a little lower. That little pocket right there. Ooh, just underneath the POC. Mm-hmm. Let's see if they can make it down there, but crude oil is catching a nice little pop to the upside. NASDAQ is kind of hanging out in a realm of its own. One big thing that's standing out, they're retesting that previous giant bear bars top, the brick top at 89.25. A lot of resistance coming in there. S&P is not lifting with the NASDAQ right now. Ooh, man, there is a huge amount of bid flow going on, though. As soon as the market dips down, that POC lifted fast. Holy crap, there's a lot of... buyers are still trying to defend the 42s. The sellers aren't going to have a hope unless they can crack through. There they go. Are the bulls there? Now, see, total difference. The bulls lost their grip. They're like, nah, I'm out. They're gone. They had to work through that low. They kept buying into the bid, buying into the bid, buying into the bid. Maybe they still are, you know. It's a nice little dip down into this zone, lower 41s. I'd prefer to see like 39.5. Nice little dip to the downside. Bull bar pop back up. A little bit of volatility with a strong bear bar down. Secondary point of interest down in the low closes. There we go. Nice. Pop back to the upside. Took a loss on... yeah, took a loss on one of the first ones, based on first in, first out. One was break even, one was a loss, and the last one was a win to compensate for the others. There we go. To make sure I had the right arrows in the right spot here. Under the right conditions, do you sometimes trade more size or numbers of contracts? Yeah. If I'm able to get them, and under the right circumstance, definitely. I like trying to keep my... And again, it depends on if I'm able to build in or not. There will be times where I just get one, and the market screams away, and I just didn't have a chance to do anything else, you know? Those are nice, obviously, but at the same time, they kind of suck because you lose your flexibility. It's kind of all in, all out. It is what it is. Like the first one is an example. That quick little dip down to the POC, I bought one, and as soon as I got in, it was right back up into the target. I was like, well, okay. You know, I didn't have a chance. The second one, bought the first one, popped a second, pulled back again, bought another one, then dipped underneath, bought another, you know. There will be times where you're able to get more, for sure. I usually like trying to keep my position size on the S&P around 5, on the NASDAQ around 3, depending on the volatility. You know, if the NASDAQ's screaming 80 ticks in a clip, you might have to reduce it a little bit, you know. But that way, if I've got 3 on the NASDAQ or 4, I can hedge with 1 on the S&P, and if I've got 5 on the S&P, then I can hedge with 1 on the NASDAQ. It's a nice little middle ground between the two. That's where I found, at least for me, that I've got the most flexibility. But again, context, situation, etc. NASDAQ's trying to get another creep back to the upside above the POC. POC is shifting into the 70s. If the sellers pressure it back underneath that fresh POC under the 70s, this could be a sign that the sellers are pushing back. Buyers are getting out. I mean, if it wasn't obvious enough of that giant wick on the highs. The buyers tried buying into the dip on the NASDAQ. They hung on for a long time, but they gave it back at the end of the candle. And now we're starting to shift gears a little bit. They're in a fist fight. Oh, man, NASDAQ's starting to creep this thing back to the upside again. Everything's been on the S&P so far, at least. Jeez. Now, on the NASDAQ, initially, on this rally higher, my first assumption is that longs got absolutely slammed. So there is a possibility of a quick little scalp back on this pop up into like the 85s, where sellers, or bulls, will be selling out of their positions that bought too high, right? It's not that bulls aren't still long, but they bought way up here in the 88s, 85s, they're stuck. So when they start getting back up into that area, they're given a chance to get out of break even. It offers up nice little scalp opportunities. Quick moves. I mean, you got to be fast. Sometimes it's algo territory, but... Quick little scalp back, just like that. See? Immediate, quick pulse. I'm not looking for a huge move. And, I mean, keep in mind, it could drop 7 bajillion ticks, whatever. But, like that, I only had a chance to get one. It's just a quick. I'm looking for those longs who got stuck way up in the 85s, 86s. I got it at 87 for them to take the break even. And they did. Nice rotation down. Only had one. But a scalp is a scalp is a scalp. Looking at the bigger picture, the gold market's trying to get out of the wedge. Now, crypto's bouncing back pretty nice. Nice little bounce. Sheesh. Pulse is back up again. Will Bitcoin make a new high? I don't know. That's what I need to see. Because that's what changes everything. If Bitcoin makes a new high, that changes everything. It's the entire context of everything that we've been talking about for the past 3 or 4 months gets chucked right out the window. And you think, like, oh, why aren't you mad about that? I'm super excited about that because that means that we get a new market. Right? We get something different. I know it's 3 months of work out the window, but, you know, welcome to trading. Just so happened that it took a little longer. But, I mean, if it makes a new high, totally different scenario. That's something that it's not done in the past, meaning that we are in a totally different location than what we previously thought. And that means that 150, 180,000, 200,000, possibly stretching to 300,000 is feasible by the end of the year. 300,000 on an extremely low probability end of things. But still, don't count it out. Everyone who was in at 3,000 wasn't thinking 20,000, you know? You took the short at the ES for a quick scalp on the... Nice. Good job. It's the same mentality, you know. It's the same mindset of the Nasdaq with the break evens. In respect to the break evens, the longs got screwed up at the top. They're going to be looking to get out. It's a perfect spot for it. Makes a lot of sense. Nice job. More bullish continuation back to the upside as expected. The bulls did take their break evens, but it was short lived. We know that the sellers got really screwed down at the lows. More continuation to the upside. Maybe. 18-ish minutes to go until top of the hour. There's no news or anything today, but top of the hour can still mess with things a little bit. Crude oil. Oh, I wasn't paying attention. On crude oil, that was that nice zone of resistance up in the 8290s. I was watching the indexes. Oh, well. Man, what a beautiful rejection there, too. Dang. Twin reversal and everything. Jeez, oh, Pete. Nani? My son's been getting into Naruto lately, and you gotta say it the right way, because, jeez. Naruto? Oh man, he gets mad. There's an Apple event at 1. Okay, good to know. Thanks for the heads up. Definitely going to make a difference on the NASDAQ. And you know what? From an underlying psychological perspective, that would make a lot of sense as to why the NASDAQ has been acting the way that it has been. It's been staying more, and we've been talking about that all morning. And giving it an underlying excuse is a nice scapegoat. Regardless, I mean, whether or not that's the reason or not, it makes sense. It's been staying more bullish than the S&P has all day. Something's going on. Whether it's an Apple event or not, you know, who knows, but. Went long with the ES, almost done trading new MacBook Pros coming up. Ooh, is that what it is? Is it about the MacBook Pro launch? Either way, I mean, been waiting for it for over a year. Gotcha. So there's some hype behind this one too. Perfect timing, huh? Like that wasn't planned going into Q4. I'm sure it's going to be real easy to get your hands on one of those. Actually, you know what? I don't think Apple really has that big of an issue with supply chain. They might this time around, though. Usually not as bad as, like, Nintendo. Oh, the Switch just launched? Oh, you didn't pre-order it? Ooh. You'll get yours 2021. Yep. Nintendo's supply chain has always been atrocious. It's never been good. NASDAQ and S&P starting to kick back up. Nice aggression, but the S&P obviously has a little bit more of the struggle bus going on. The NASDAQ's been more bullish all day, or at least all morning. Gold picking up the dip on the lows here. A lot of defense from the bulls on this pocket down here. But very muddy pocket. You can see the wicks all over the place, but we know gold is pointy and pokey and nasty and sharp. Same thing here. More continuation to the upside. Huge candle gap on the S&P. Wow, massive candle gap on the S&P. That opens up, at the moment, objectives on the S&P back to settlement, basically. 44.6375. That one candle difference changed everything. On the NASDAQ, upside candle gap objectives are up to 167.50, though it does look like they're closing it in a little bit. Which makes sense. They have been bullish more on the NASDAQ than any of the others. Couldn't break a new high above the 122s after missing a new low underneath 49. Kind of vindictive around here. As far as the shorts, I mean, the stuck shorts are getting absolutely ran over right now, obliterated. They've been getting stuck, and they've been trying to hit the escape hatches since back here. The stuck longs that were stuck long are no longer feeling stuck. They are very happily in profitable territory and likely at and beyond their objectives. The next pullback is going to be the bulls looking to re-up into that move. We've got a higher low. This is obviously an L5. This might as well have been an L6 at that rate. Looking for the continuation to the upside off of an L5, you're usually anticipating a slightly deeper pullback. So far, it's been L1s. That's atypical. The next pullback is usually going to be an L2. Awesome. Have a good one, Steven. Enjoy. More bullish continuation to the upside. Everything is looking relatively strong so far, but we're not really getting hardly any pullbacks. And I feel like it's just a rinse and repeat. We're never coming back. It's gone. Never to return. It's forever gone. Every time we get these no pullback markets, it just doesn't stop. Fresh new highs definitely helps things out. Come on, NASDAQ. S&P pulling back up to the highs, getting very close to the high closes, which is the next zone of resistance. Although shorting this is suicidal. I'm not interested. That is a hard pass. No thanks. The market, when it's in this kind of breakaway momentum, especially when we know that shorts are stuck, do not sell more into this move. It's going to get worse. That's just how these kind of moves work. Stuck shorts tend to get more stuck first before it gets better, you know? And that's only if they're managing it properly. It's account Sudoku. Isn't it like sorry, what is it? The seppuku, that's what it is. Someone couldn't pronounce it, so they said committing Sudoku. Oh, man. Anyway. Bulls still looking for a transition phase back to the upside. They're not really pulling back at all. I mean, the S&P's pulling back a couple points off the highs, but that's it. Sellers lost the fight to the downside, which means that the bulls are obviously winning and likely to continue winning for the foreseeable future. It's just finding a halfway decent pullback that is still kind of a pullback. Closing that last candle right off at the top again. NASDAQ makes it all the way back up to settlement. That's a big objective getting hit. likely going to be a lot of profit taking as we start encroaching into these highs. But again, we're still probably going to see another leg to the upside at the very least. NASDAQ bulls have completed a major objective hitting settlement, though, so a deeper pullback, it is a possibility. Looking at some of the gapping going on some of the S&P candles, the last gap was actually down from close to open. S&P continuing on its merry way. Awesome, Hope. Thank you for posting that in the Discord chat. I appreciate that. I love really cleanly laid out examples like that. For example, that's awesome. I appreciate it. Gold is starting to the bulls are losing their ground a little bit here. 1764.8 is what the bulls need to close back above on gold. They've got another 3-ish minutes. And speaking of which, 10 o'clock, top of the hour right around the corner here. Get those questions in. We'll get those covered for you. Otherwise, waiting for a bit more of a pullback. It's pulling back a little bit. A dip down into like the 23s, 22s. I would really like to see the 111s though on the NASDAQ. On the S&P, preferably more so around like the 51s even. Just something a little bit further down. That negative candle gapping has me concerned. And the fact that the NASDAQ completed its objective of testing settlement. There's a lot of things that are suggesting that this pullback, more than the others, should be potentially larger than you would expect. Which kind of fits the bill, right? Bulls are going to be looking to FOMO chase this to the highs. And, well, knowing that it hit an objective, what better place to dump those orders onto than all the FOMO chasers? Doesn't mean it has to pull back farther, but that's my concern at the moment and why I'm not pulling the trigger, even though it is technically pulling back. What is negative candle gapping? Could you please demonstrate? Yeah. Negative candle gapping, the way that I like looking at it at least, happens a little bit more infrequently. So like this is an example. This bull bar into that bull bar into this bull bar, right? So if you look at that sequence, if we drew a box around that candle and we drew a box around that candle, they're obviously overlapping, right? That's a problem. That's not a gap. But if you look, the actual overlap is all wick. Like that's it. There is still kind of a gap inherently in there, right? That's what I would consider negative gapping. Negative gapping is where they just pull back a little too far. You know, it's kind of like with an Elliott wave stops being an impulse and turns into a corrective phase. Like, crap. You know, like it doesn't mean it has to stop. It just means that they went a little too far. So the next time that it goes up and through the objective, you tend to expect them to stop and not really make it as far. That would be more along the lines of how I would look at negative candle gapping. Or negative gapping in general, where it technically filled it in, but I mean, it's all wick. You know, like, did it? Technically. I measure it the same way, but there will be times where that inside candle, because of the negative gapping, will actually have it'll kind of mess with things a little bit, so you might have to adjust the way that you measure them, but it's the same mentality, yeah. The problem obviously becomes that if the wick is too large, then what's the gap objective? It'd be like here to here. So instead, I'll go from there to the close of the candle or to the open of the candle, whatever it happens to be, and then try to project from there. 1 to 1 would have been there, 2 to 1, and it didn't quite make 3 to 1, but... Another way to measure it, alternatively, could be just if it really starts taking off, which again is a little less likely, but you could measure the entire thing up to the next candle, like here. And that will create a secondary objective. Although the market might take some more time to get there, you're kind of skipping that distance in between, right? Now, technically speaking, I could also just measure from here to here, and you have the candle gap there. So, you know, there's a lot of ways to finagle it, and actually that was the top. But, I mean, they all give you around about the same target area. So, yeah, no problem. I used to hate when traders would say I have to wait for the pullback to get in until I kept getting my butt handed to me. Yeah, you know, it's... here's the thing with the markets lately, too, is that they're rewarding impatience right now for the time being. And I say that because it's rewarding bad habits. FOMO traders, chasers, people who buy the top and it keeps going higher and they're rewarded for it. The problem is the next time it happens, they do it again and they end up buying the high and their account goes to zero because they don't know when the hell to get out. That's what happens when you reinforce bad habits. It's one of those situations where there will be times, and there have been times in the past, where I sit here all morning with no trades because the stupid thing won't pull back, you know? Or if it does, it's not far enough. Where I'm looking for an L2, but it only does an L1, just as an example. I would rather be out wishing I was in than in wishing I was out, you know? It sucks. I don't like sitting here all morning or most of the morning without anything. Luckily, we had a couple scalps earlier. But there will be times where that doesn't happen, and we miss the whole boat. You know, it's like, well, you just got to sit and wait. Because the cost of not sitting and waiting is much more expensive. It is frustrating, though. It's really annoying to just sit here like, oh my god, gotta wait for a pullback, gotta wait for a pullback, gotta wait for a freaking pullback. You know, you can hear the frustration in having to stick to the trade plan, but there's a reason that plan's there. More so to protect you from yourself, I find. But oh well. Couple minutes until 10 o'clock, top of the hour. Get those last questions in. We'll roll into the extended session. And then we'll see if there's any more that wants to set up. Last extended session we had, I think there were a couple scalps that set up, right? Going into the end of the day. I think they were all in the NASDAQ. Whoops, that's not what I wanted to move. Oh, sure. Yeah. Oh, no, there was one on the S&P because the NASDAQ was the head short. Yeah, that was that long in the... I was going to say, I thought we had a halfway decent one. Yeah, whatever. I guess it all depends on if it pulls back, you know? So far, they have bears who maybe tried selling the settlement. That seems like a terrible spot, but, I mean, sure, it's there. Open candle gapping to the upside, even through that sell side trigger. Low probability, high reward at its finest right there. I mean, the only way that I would feasibly accept a trade like that is if it would fit a 5 to 1. I don't think it does. No, 5 to 1 is below the low. Maybe on an inside pullback, getting filled on the. Maybe, I guess, but I just don't see. I don't see it. There's way too much bullishness. The S&P, the previous candle's low, and also the previous candle gap begins to get tested and filled in around the 52.75s. Small candle gapping from close to open, now up on the S&P. And we are also at 10 o'clock. All right. So, do a couple more seconds. Feel free to get those questions in, and we'll roll up into the extended session, and then maybe we'll find a little bit more. Fingers crossed. NASDAQ, I'm a lot more hesitant to be a buyer on, which is why I didn't even buy into the trap on that bear bar. That's extraordinarily concerning. As far as the S&P is concerned, though, we haven't filled an objective on the S&P yet, so we've got a little room for a pullback. Maybe. Anyway. All right, that's going to do it for the morning side of things. Let's shift over into the extended session for members and VIPs. For the rest of you, I hope you had a fantastic morning, and yeah, I mean, overall, we got a couple nice scalps early on, right after the morning bell, and then not a whole lot else after that. Kind of calm and quiet. Well, we'll see what we can make of the extended session here and keep it going. But if I miss any questions, feel free to drop them in the comments below on the YouTube side, or if it's a more detailed question, you can always shoot me an email, jhb@ssftg.com. Until the next one, though, enjoy, rest up, and we will see you all later. For those of you still sticking around, hang out for a second, listen to me babble to myself for a second, and we'll swap over. Have a good one. We'll talk to y'all later. Thanks.